Hey everybody, and welcome to the Plant Stock channel. Here with Mayur to discuss Oatly and their latest results from yesterday, their Q4 results and their 2021 results. Before we get going, as always, just like tradition, disclosure that whatever me and Mayur talks about, it shouldn't be construed as financial advice. It's just two friends talking about companies we're interested in. So just keep that in mind. I think most of you know about that. So Mayur, how are you doing today?
Hey, pretty good.
Yeah,
Digesting all this news from Oatly, so
yeah, that's
ready to rock.
understandable. So
Yeah,
I thought, should we just give a brief market overview? Uh, Bearing in mind that stocks once again seems to be pushing down. And if we take a brief look at what's going on here, we can see that Oatly right now is down about 4.3%, was down actually 5% just a while ago. Beyond was, down about 3%. TTCF about 3%. And so my understanding is that the peace talks weren't actually going that well today in Turkey, but they're still open for keep talking more, which probably is the reason why it's not, pushing down too much at the moment. And my understanding is also that, uh, yeah, no, actually, I'm not sure if it's anything more than that. Yeah, it's the CPI data is out today too. So inflation is apparently since February up now 7.9%. But basically, it's not that bad. I mean, the market was expecting 7.8, right?
yeah, exactly. Yeah, this takes us, at least for the U.S., all the way back to 1982 or even 1981,
Yeah.
the last time we had inflation this high. According to the CPI. So it's definitely being felt now by everybody. You know, especially at the gas pump with
Yeah.
gasoline prices hitting highs that we haven't seen in a long time.
Yeah. Definitely. And then we have the Fed coming out with their decision next week. I think March 16, right?
Mhm.
We're expecting, I think, 25 basis points. They're probably gonna, be quite low right now. They don't dare to start a recession.
Yeah,
So
yeah.
that's
I think
good.
they should do more, but I think Jay Powell is just going to take it very easy.
Yeah.
Um,
So yeah, my understanding is that the Fed they shouldn't be influenced by politics, but it does seem that they are probably more affected than they should be, basically. So
yeah.
but yeah, well, we're gonna monitor that for sure. So if we get going with Oatly, what's your first impression?
So the larger context about everything that was reported is that demand remains exceptional for Oatly,
Mm,
and the primary issues that they're facing is from the production side. That's the easiest and quickest way to summarize the entire quarter, the earnings call, and the outlook.
yeah,
Demand is exceptional, but because of ongoing production issues at their various facilities, such as Ogden and Millville here in the United States,
yeah,
as well as inflation pressures, which is completely outside of their control. This is weighing on margins. So it's
yeah,
kind of a mixed picture, a mixed bag here.
yeah.
Um,
Should we
and
take a
that's
look at
basically
the?
what's been happening.
Should
Yeah.
we take? Do you have the screen or should I share it?
Yeah, I can share it here. So I've just got the press release pulled up here. So this was a record revenue quarter, almost $186 million for the quarter,
Yeah,
increase of 46.3%. That was well above their guidance that they issued, which was around 179 million. So amazing results on the top line. Again, revenue is the most important number for any business, right? Because it just tells you, in the quickest way, it tells you how much demand there is for your products, right? So when you look at revenue growth, we're looking at how much adoption is your product gaining, right? How much, customer retention do you have?
Yeah.
So revenue summarizes all of those things, which is the most important thing for any business. And my estimate was for 184 million, so they beat it, quite nicely there. So I was, very impressed with that. However, if you recall what I was talking about last time, during our, expectations call, I was saying that, I was expecting a drop in gross margins. My expectation was for 21% for Q4, which was, significantly lower than Q3. Q3 gross margin was 26%. And I said it was going to come in at 21%, primarily because of, high inflation, delays in ramp costs at their Ogden facility, rising oat prices, higher logistics and freight costs, trucker shortages. So this is all, what's been going on, for all stocks across the board. All companies are kind of facing this all together. So Oatly is no exception to that, because they, just like everybody else, is reliant on transportation costs, which factors in fuel costs. And fuel costs, as we all know, have been rising dramatically.
Yeah.
In Q4, but especially now in Q1. And so that's why they also guided for even worse gross margins in Q1. So that's kind of the reason why the stock initially jumped on the press release, because they saw the top line was a big beat.
Yeah.
But then it reversed all those gains, and now we're back down again, because of the commentary by both Tony and Christian that although demand is exceptional, they're going to be working through some challenging times with regards to margins, because of significantly higher costs, that are simply outside of their control. So my expectation was 21%, but they actually came in way well below that at about 15.9%.
Yeah.
So, and they cited the reasons for that. The primary reason for the gross margin in the fourth quarter was due to additional costs as compared to the prior year, related to the startup of the company's 3 new facilities, including higher depreciation of 6.4 million. There's actually a slide that summarizes that, on their Q4 slide deck,
Yeah.
um, which I thought was actually really cool, because this is one thing that I like about Oatly, is that they're pretty transparent with explaining exactly what happened, right? When there's a big change in something like gross margins, initially everyone sort of panics, because everyone is like, what happened in the quarter? And they dedicated an entire slide to tell you the reconciliation from Q4 of 2020 to Q4 of 2021. How did they really get to that 15.9% gross margin? Because that's an all-time low for Oatly. And you can see that this is how they got there. And so the biggest portion of that was new facility startup expenses. So I see this as an important caveat, because it tells you that basically half of their entire gross margin decline, is due to production ramp inefficiencies, which is completely a short-term thing. So that to me is very bullish, because even though the number is bad, it's going to be short-term in nature. And
Yeah.
and both Tony and Christian, reiterated that on the call, is that the biggest contributor to gross margin expansion is going to be related to ramping up their facilities in Ogden and Millville, and in China and Singapore as well. So that's half of the battle, right?
Yeah.
Is just
And
getting
I
that up and running.
And I think we have to actually add that it was quite impressive, as Tony said, that when he really, put some perspective to it, basically it was 3 facilities that they were ramping up during a pandemic year. So, I mean, that would be tough in any year, right? But giving, the pandemic, inflation, all this situations happening at the same time, it's still quite impressive what they've done.
Yeah, yeah, absolutely. And they're trying to balance this, because they're essentially aiming for global domination here, with this map that we saw, from last quarter as well. But they're essentially trying, their best to achieve localized production. So they want to be in control of their own destiny, right? And this is why Tony and Christian are both very adamant about this idea that as they reduce their dependence on co-packing, right? And that was a big reason for why their gross margin declined,
Yeah.
is because they weren't able to get Ogden up and running fast enough in order to meet the demand, right? they have to figure out a way to, create the product in any way that they possibly can. So this is very similar to what we heard from Beyond Meat as well in Q4, because they aren't able to keep up with, some of the demand that's coming from their, their food service side of the channel, as well as in retail sales. They had to rely on co-packing or co-manufacturers.
Yeah,
And that's the easiest and quickest way to produce your product, but also with higher costs as well.
exactly.
So, they had to prioritize just getting product into customer hands at any margin that they possibly could get.
Yeah.
Um, because once you lose, customers, it's hard to get them back, because if they start to see that your product is simply not available, they'll go to someone else and they may not come back to you after that.
And that's basically what he talked about to Tony. That's going to be the priority in the next few years to make them more profitable and get those margins up again. It's basically making the whole business more efficient, both with the factories, the facilities, and like you said, the co-packaging. So that's important to keep in mind that that's something they're really focusing on now.
Yeah, exactly. So yeah, so that's basically why, I think that the stock is sliding. Is, although demand is just phenomenal, the growth has just been exceptional. But what happened is a combination of things, which is one, there is this picture right here, which is half of the battle is, controlling their own, new facility ramp up, but the other half is outside of their control, which is inflation. And the market may be fearing that that portion of it may persist for basically the entire year. So, Tony and Christian both did say that, Q1 is going to be even more difficult than Q4. So, and growth will slow, compared to Q4 as well. So I think, Christian did say that they are expecting a deceleration of growth from Q4 to Q1, but still pretty good growth overall relative to Q1 of last year.
Yeah,
And reiterating the overall, full year outlook, which is, growth of about 37 to 42%,
yeah,
43%.
exactly.
So it's still fantastic growth, but it's on a reduced outlook for their production capacity.
And it's
Um,
probably one of the biggest reasons why the stock didn't. It was basically 15+% pre-market yesterday, and that's basically what you said also, that people just looked at the revenue, and then when the call came out, I think that's what people heard, their projections, and then basically got scared off.
yeah, yeah, exactly. Because I think there's going to be ongoing production issues. That's why they had to taper back their 2022 production. Remember, from Q3, their guidance was over 1 billion liters
Yeah.
of production for 2022, and now that's been tapered down to about 900 million.
Yep.
So a little bit of a hit there of about 10%. I think this is all, short to medium term, though. Ultimately, Oatly will prevail, I believe, because, I've seen enough evidence that, by other metrics, that demand is extremely robust. I can't say the same for Beyond Meat right now, because retail sales are down, quite dramatically. But you can see for Oatly, they've just dominated by market share. They have very strong sales velocity. They're number one in multiple countries here.
Yeah.
Which, by the way, I think they added two new countries. So
Yeah.
they used to be,
Switzerland
yeah,
was
they added,
one, and then they're in talks with Spain and Portugal.
yeah,
Mm,
yeah, exactly. But what I was saying is that, by market share, they added Switzerland and Netherlands,
right.
I believe, as number one.
Oh
Because I
yeah.
just have, if you look at, from Q3, those two countries were not included in that.
No.
Uh, so I think that's two new countries that they have added as, being number one by market share. In Q3, it was just these three countries, right? The UK, Germany, and Sweden. Now it's the UK, Germany, Sweden, Switzerland, and Netherlands.
Well, it makes total sense considering their facility, the Wislingen in the Netherlands, there in Holland, which must be really, the margins there must be way better though, considering.
Oh yeah.
Mm.
Yeah, they definitely are. And this is also interesting. I think so. You mentioned this on our last call during our expectations call that they're actually profitable in Europe,
Yeah,
and so that was actually the case in 2020. But I think again because of various either inflation or other issues ongoing with regards to COVID and ramp inefficiencies or running under capacity. That number flipped negative um, for Q4. So
mm.
here it is right here on their press release. They talk about that.
Yeah,
So for Q4, in EMEA, right? They are once again negative on adjusted EBITDA as well as EBITDA. But from the 1 year ago period, they were actually positive EBITDA. So Q4 of 2020, they were positive EBITDA in Europe, Middle East, and Asia.
yeah.
Um,
So,
so,
there's
but
something
for the full year,
yeah.
for the
Continue.
full year, they're still positive on EBITDA for Europe. So 11.5 million dollars of positive EBITDA, which is really good to see. So that's telling you that this is what is to come. Therefore, from the Americas and Asia, because if they can do this, if they've already proven it in Europe, then this is the proof of concept. The
Yeah,
margins are still very low,
mm.
but it tells you that they do have a pathway to profitability because they're already doing it right now.
It's a perfect template. Proof is in the Oatly chocolate pudding here.
Exactly. Yeah. So that's also very good to see overall.
Mm, definitely.
But yeah, the stock is being weighed down again because of fears that inflation are going to persist. It won't be just short term. And I do think that they're going to get over the production issues. It looks like that's already starting to happen.
Mm.
But because they reduced their production forecast, that's another reason why the stock is down for now.
So, but one thing that I'm wondering about is their overall year-over-year growth in EMEA, in Europe and Middle East and Africa. And I'm guessing Europe is like by far the biggest there. But how much did it grow now in Europe? Was it like 14 or 15%? Or maybe it was 19.
Yeah, I think the slide right here for the full year, it was 26% growth.
In EMEA, okay, it was actually 26. Okay,
Yeah,
that's still pretty decent then, because
for the
yeah,
full year. Yeah,
yeah, and they're in 25 countries now in EMEA.
yeah,
So
yep,
guys,
exactly.
for you who don't know, EMEA again, guys, that's Europe, the Middle East, and Africa. But don't know actually that much about their what they mean by Africa there, depending on.
I think it's just a general term, so they,
Mm.
everyone kind of uses that term as one huge landmass.
Yeah.
So, even if they don't have operations there, it's just included there.
But what I found really surprising was I think the first or second slide when it talks about how many food service locations they have and how many retail locations. They're actually way more than Beyond now.
Yeah, so this is the thing. I was wrong initially, and I've started to correct my overall viewpoint. Um, I think Oatly is significant is in much better shape than Beyond Meat and basically every other plant-based food company out there.
Yeah.
Whatever margin issues that we're seeing here are again due to either ramp inefficiencies or inflation.
Yeah.
The ramp side of things are fully within their control, and that's why they've been guiding for improving gross margins throughout 2022.
Yeah.
So they've said that multiple times on the call is that apart from the Q1 hit, which will really kind of weigh on the overall gross margin for the year,
Yeah.
they're still expecting significant improvement in Q2 and then even more in Q3 and Q4.
Yeah.
So most of the growth that they're guiding for 2022 is going to be back half weighted. Um, pending the resolution of getting Ogden and Millville fully ramped.
Yeah. So,
So that's the key right there. Is ultimately is production.
but what
That's the
I'm
main takeaway from this call.
yeah, but what I'm wondering about also, maybe we could take a look at that, is capex and their free cash flow, how that's looking right now. And I thought we could also end the video later with yeah, questions about dilution. I know a lot of people are wondering about that, so they did talk a little about that, I think, on the call.
Yeah. So they reiterated the same capex guide, which is 400 to 500 million
Yep.
for for the year, and that's going to weigh on their liquidity. But there was an analyst specifically asked about this, and and Christian said that they've got sufficient liquidity for 2022, but they are opportunistically monitoring capital markets for opportunities.
Mm.
So that's a kind of a standard answer that any CFO would give.
And
Um,
basically, what they meant by that is that because we've understood that if they're going to raise capital, it's hopefully not going to be by dilution, and the way they would do that, I guess, would be some form of bank loan. And like you talked about before, that bank loan right now probably wouldn't be in their favor considering where they're at.
Yeah, so I kind of got the impression that they were so when they say that they're monitoring capital markets for opportunities, that to me tells me that they are looking for equity dilution. Now, it could mean that he is thinking about if their stock price recovers, then they will be able to issue debt at a favorable interest rate. So that could be what he means by that, but I I don't know. I guess we don't really know exactly what he meant by that.
Mm,
So when he's saying that they're monitoring capital markets for opportunities, it's hard to know exactly what that means
right.
because to me, my impression is that they are watching their stock price, and if their stock recovers nicely, then they'll issue some dilution.
All right.
Or it could mean that if their stock price recovers, then capital markets are more calm and more bullish again, and therefore, if they go to the bond market, with a debt offering, the way that Beyond Meat did, then they'll get a much more favorable interest rate. So either of those outcomes are possible. I hope they go to the bond market because again, if you're bullish on your own company's future, if you're seeing that there's strong sales growth, and if you're very confident in your ability to be profitable and earn a very high return on your investments, then you should go the debt route. Um, because dilution comes at a cost too, right? Because you're diluting your own shares. Whereas if you issue debt, the cost of debt is small compared to your return on your invested capital,
Yeah.
right? So if they're going to spend roughly, let's say, $500 million, and if they think that they can get to say $4 billion in revenue and 20% EBITDA margins by 2024, that's a significant level of operating profit that they're generating on just $500 million of investments this year, just 2 years down the road.
And that
So
and that's the
that's a huge
difference.
return on investment.
Yeah. And that's the difference between one of the bigger difference between Beyond Meat and Oatly is that right now they've had basically the same amounts in money, free cash flow, but most of that money hasn't been a debt for Oatly, which it is definitely for Beyond Meat. All of that money is debt. So
Mhm.
so that puts them in a huge advantage financially as well. Obviously, I wouldn't say they're competing with each other, but just from from a financial perspective.
Yeah. Yeah, exactly. And Oatly does have, like he said, they have sufficient liquidity. They could definitely tap some, short-term bank loans. Those are more like, revolving lines of credit just for everyday operations. So that's not really, um, loans for, capex per se, because they can't, those types of loans are more working capital loans. So it's for very short term liquidity needs. Um, but yeah, they're going to have to raise capital. I think that's a given at this point.
Yeah.
Because they just don't have enough cash left. Plus their cash burn coming this year, on top of $400 to $500 million of capex. It's almost a guarantee that they're going to have to raise capital.
Yeah. But when
Um,
you consider the price today on the stock, which is around $5.3, their PS ratio right now is about, what is it, about 5 or 6? Uh,
the PS ratio.
yeah.
Um, yeah, the price to sales ratio is around. Let's see. I want to say it's less than that. It's
Yeah.
around. Yeah, it's around four, less than 4.
But what I find most impressive, because you have to think of a company like this in a long-term perspective, is that by 2025 they're expecting 2.5 billion in revenue, right? And then 2026, like at least I think 3 billion. So if we're
Mhm.
thinking of forward PS ratios, we're talking about 1 from that perspective, which is
If you
amazing
think
for a
it'll
company.
get there,
Yeah,
yeah. If you think they can do 4 billion in revenue, by 2024, maybe.
4 billion.
Yeah,
Yeah. Mm,
it's trading at under 1 time sales. Going out that far.
mm,
So it remains to be seen how fast they will grow at their current price point.
yeah.
So this has been, again, one of my ongoing, not criticisms, but wish list, of Oatly, is I would rather have them be both a brand leader and a cost leader. Kind of like, there are brands out there that are iconic, that are premium, but then there's also iconic brands that are everyday affordable,
Yeah.
right? Like Coke and Pepsi.
Yeah.
Um,
Exactly.
Both do well.
Yeah.
And I prefer Oatly go the Coke and Pepsi route rather than the Lululemon route. um, where yoga pants cost $100. So yeah, there's a market for it, and Lululemon does really well, by the way. So it's not like they don't do well.
No.
Um, but I just think that because there's a mission behind Oatly, which is not just for profitability but with a purpose, they will
Concrete.
achieve their mission better if they were to make their product widely affordable for the masses.
But the more I think about that, considering what Tony talked about on the conference call yesterday, with their goals and now with the facilities in Mansha and Singapore, and having about 9 facilities by in 2023 sometime, and he talked about basically getting close to a vertically integrated business. So they're going to be able to lower their expenditures a lot, right? And then talking about margins up around 40% in a couple of years from now. I
Yeah.
mean, it makes sense that they should be able to quite easily lower the prices. And
Yeah, and by the way, so they actually have been there before. There's a slide here that I saw from their Q3, and I think it might be in their Q4 as well. But back in 2018, they actually were at 40+% gross margins.
yeah,
So this is just them returning back to where they were at one point, prior to being public.
yeah,
Um, so I really believe their gross margin target, and it might even be conservative. So if they can get to this, if they can get fully ramped, right, and reduce their dependence on co-packing, I think that they can easily hit that 40% gross margin target.
yeah, exactly. All right. I'm thinking, should we take one question or maybe two?
Yeah, let's do it.
And from, let's see, from Kuberin here. Hi, sir. What's your insights when it comes to NotCo as a plant-based food tech startup? This unicorn has big potential to become a highly valuable company in near-term future.
Yeah, I love NotCo. Even before I even started looking into Oatly, I knew that I was a big fan of Oatly for years, but The moment I tasted their product, I said, this is something that has real potential.
Yeah.
Because it does come very close to mimicking the taste of dairy milk. From what I remember dairy milk tasting. It's really good. So I think NotCo has all of the opportunity in the world, and they're interestingly sort of like the best of both worlds. They've got both plant-based milk and plant-based meats. So it's kind of like an Oatly and Beyond together in one.
Yeah.
And they're getting some really good placement now in retail. It's available at all of my local stores. I've had it. I love it. Oatly and NotCo are my two favorite plant-based milks. I basically don't even go to anything else than that.
Right. But
So
at the same time, it feels like there should be ample room for them, right? And since it's still a private company, right? I do feel it's interesting though that I believe Jeff Bezos invested like 1.5 years ago, $300 million into them, which kind of tells you that he believes in it, anyways.
mhm.
But which isn't very much money for him, but it's still impressive, right?
Yeah,
But it feels like there should be ample room for both.
yeah, it's a
To
12
be,
billion market, at least in the US. There's $12 billion that are still
yeah,
going to dairy milk sales.
yeah,
And there's this slide from Q3, which I wish they had this, but they for some reason removed it in Q4. But this is very valuable data because it tells you what the total market potential is.
yeah.
And in the US, as of Q3, plant-based milks were just 11% of total dairy sales,
Mm,
including dairy milk.
yeah,
So this has potential to 10x, right?
yeah.
So there's a lot of room for growth for multiple players. And I think, if there were to be two winners in the plant-based milk industry, it'll be Oatly and NotCo,
Yeah.
in my view.
Yeah. But I also thought, actually, there's several questions here, guys. I would say that try to come to our free Discord channel where both me and Mayur, yeah, we talk about these things on a daily basis. Basically, we talk about Oatly, we talk about Beyond Meat. Come in there, join it. It's in the description. It's free for now, so we can talk more about it. Me and Mayur, we're trying to be better at not having too long videos because we want it to be accessible for everyone. So, is there something you would want to end this with?
I think, basically the big takeaway here is that demand is exceptional for Oatly. Sales velocity is exceptional. Um, Everything that they could possibly ask for is coming true. So there's some real brand equity here and significant growth in demand.
Yeah,
The only issues that remain are production and cost inflation. So those are the two things that are weighing on the stock,
yeah,
not demand.
yeah,
So that's the main thing that we want to see out of an upstart like Oatly
yeah,
is demand remaining strong, and it looks like according to every metric that we've seen, it's demand is just exceptional, and
yeah.
they're just not able to get the product produced fast enough to to satisfy that demand.
Yeah, it seemed like they would actually be at more food service locations in Europe if it wasn't that they had to prioritize retail.
Yeah,
Uh,
and Starbucks, by the way, so they mentioned this on Q3 call, but Starbucks has started to rely on other suppliers as well. So I believe 80 to 90% of Starbucks oat milk is supplied by Oatly,
hmm.
not 100%. So it should
Seems,
be one. They would like to have 100%.
yeah,
I'm assuming,
yeah.
but they're just not able to supply that.
So, but to some extent, that's a good problem to have that they're that popular. And let's not forget we compare it to, but that's the easiest comparison because both you and me are heavily invested in Tesla. But this kind of reminds me very closely about Tesla's journey. Opening up, focusing on expanding in facilities, getting lower margins, but being very popular. Tesla still to this day, it's hard to actually get a Tesla on time. It takes months and months, and now they have an issue Oatly with actually having enough products. So it's a good problem to have. You just need to get those facilities out there. And that's why it's probably good if they could get a bank loan soon so they could actually start building up in the tempo we need them to do. But still impressive given what's happened last year, right, with those three facilities.
Yeah.
All right.
Mm-hmm.
All right, guys. But that's it. Join the conversation in our free Discord. Again, take a look in the description and you'll see us soon again. All right. Thanks, Mayur.
All right. See you guys.
All right.